Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. Let's take a look at the stories for the day. American President Joe Biden, French President Emmanuel Macron, and British Prime Minister Rishi Sunak have hailed Air India's multi-billion-dollar aircraft deal with Boeing and Airbus. The Boeing deal was welcomed by Prime Minister Narendra Modi and Biden as a shining example of mutually beneficial cooperation. So, why has one deal brought all these leaders together, and what does it mean for India's civil aviation market? Bhaswar Kumar explains.
भारत पूरे क्षेत्र के लिए एमआरओ का हब बन सकता है। आज सभी ग्लोबल एविएशन कंपनीज भारत में मौजूद है। मैं उन्हें इन अवसरों का पूरा लाभ उठाने के लिए आमंत्रित करता हूं। एयर इंडिया और एयरबस का समझौता भारत फ्रांस स्ट्रैटेजिक पार्टनरशिप के लिए भी एक महत्वपूर्ण उपलब्धि है।
Airbus is contributing to the outstanding development of India, and the new 250 aircrafts which will be delivered to Air India will be one more step in this direction. There is a deep commitment in France to provide the state-of-the-art, the most efficient technologies available to India, and to be part of your Made in India strategy.
Clearly, it's a big deal. A year after coming into the Tata Group, Air India on February 14th said it had placed an order for 470 planes, 250 with European plane maker Airbus and 220 with America's Boeing. This is the world's largest ever single tranche aircraft purchase, eclipsing the 2011 American Airlines order for 460 planes. The deal is valued at over $70 billion. Sealing the deal reportedly took months of secret talks, which were carried out in London. Air India's order involves 70 wide-body and 400 narrow-body aircraft from the two aircraft makers. It also has the option to increase the size of the order from both. The first 31 aircraft will arrive in the second half of 2023. Air India has also signed deals with engine manufacturers, CFM International, GE and Rolls-Royce. Airbus and Boeing form a virtual duopoly in the global civilian aircraft market. And the Indian market may deliver equally lucrative deals beyond Air India. According to aviation consulting firm Kappa India, Indigo is also exploring an order for 500 aircraft. The Air India deal comes at a time when India has a pressing need for more planes. Last year, a business standard analysis had estimated that the Indian aviation market would need 2,200 new aircraft between 2022 and 2040, a threefold jump from where its commercial fleet stood then. That's just a shade below what all the Latin American airlines will need in that same period, and about 65% of the entire Middle East region's projected demand. Meanwhile, China will need almost 4 times as many new aircraft by 2040. But Beijing's homegrown civil aircraft may dampen Airbus and Boeing's prospects to some extent. So, what does the Air India deal say about the size and potential of the Indian aviation market?
India's fleet has reduced by over 400 aircraft, and this began from when Kingfisher Airline closed. There was 150 aircraft which left. Then when Jet Airways shut down, 160 aircraft left. So this 470 aircraft, I mean, eventually, when we get to 470, which will be in 5 or 6 years from now, isn't really doing much. We need a commercial air fleet, passenger fleet of at least 2,500 aircraft. So it's a step, but it's a baby step.
On the wide body side of things, this is the largest wide body order, if I'm not wrong, in the Indian market. Now we are expecting another 1,000 to 1,200 orders to come through. If you look at the the Indian market, it has always been a very capacity starved, especially on the international, a little capacity starved markets. It is definitely a step in the right direction, and we do feel that it is highly reflective of the true potential of the Indian market, right? Especially on the international side, which has remained highly underpenetrated.
India became the third largest aviation market in the world in 2022. And India's total air passenger traffic is expected to increase from around 340 million during FY20 to around 830 million by FY33. That is the assessment of the Airports Authority of India. So, what do the Air India deal and the prospect of even more aircraft taking to the Indian skies mean for the market?
Year on year, we have a fleet, we have an air traffic growth, and we need to meet up and keep up with that air traffic growth. And we're not doing it because the fleet coming in, or the fleet we have in India, is just about covering or taking care of what we have in terms of growth, and our growth is being restricted. But once we start deploying more capacity in the market, we should see a balance in airfare. We should see better competition, a better product, a better service.
These aircraft, if they as and when they are deployed in these markets, we will see a lot of new market getting created. We will see a lot of demand percolating to other markets apart from the US, London, and the Canada, the major markets that the Indian travel to. This is the right time for the Indian carriers to also chip away some of the traffic from the Gulf carriers also.
Boeing already sources $1 billion in products and services from India annually. Meanwhile, Airbus sources $650 million in manufactured parts and engineering services every year from Indian suppliers. Addressing a virtual meeting with the French president on the Air India deal, Prime Minister Narendra Modi said India could become a maintenance, repair and overhaul hub. The Air India deal is also being seen as a stepping stone for bringing commercial aircraft manufacturing to India.
It's wishful thinking to at some point consider a final assembly line for a large aircraft like a Boeing 777 or an Airbus A350. There's no way that Europe, Airbus, or the US, Boeing is going to give India carte blanche transfer of technology to make its latest equipment.
In order for the MRO facilities also to come up in a country, you need the volumes. This is the right time for the operators to actually consider the Indian market, because there are volumes that are going to be coming into the Indian market, not just of narrow bodies but also of wide bodies.
Both US President Biden and UK PM Sunak have said that the Air India deal would create a considerable number of jobs in their respective countries. That explains their praise for it. For India, it is a reflection of the potential of its civil aviation market. Whether that potential can be translated into made in India passenger planes and the country becoming an MRO hub remains to be seen.
India's airlines aren't the only ones giving wings to India's ambitions. A major find in the hills of Jammu and Kashmir has also ignited the country's hope to become a key player in the electric vehicle ecosystem. On February 10th, the government announced that it has found a stash of 5.9 million tons of lithium in the state's Riyasi district. But there's many a slip between the cup and the lip. Will this lithium reserves make India an EV power? Tushar Verma answers this question.
Lithium, one of the lightest metals in the periodic table, is the driving force for the lithium-ion battery manufacturing. This is far more pronounced for the electric vehicle ecosystem. However, this is a scarce resource and only a few countries have the reserves. The maximum reserve is in Bolivia with 21 million tons, followed by Argentina with 19 million tons and Chile with 9.8 million tons. Till January 2023, India did not even figure in the list of countries with lithium reserves. But that changed a few days ago when the Geological Survey of India said it had found a whopping 5.9 million tons of lithium reserves in the Riasi district of Jammu and Kashmir. But this is not the first time that lithium reserves have been found in India. About 1600 tons of lithium was found in Karnataka earlier. But so far, there has been no commercial usage of the reserve. The Jammu and Kashmir is the first major deposit in the country, which has put India at the 6th position, overtaking China. India imported 9,000 crore rupees worth of lithium in FY21, which increased to 14,000 crore rupees in FY22. The Ministry of External Affairs had planned talks with lithium-rich countries such as Argentina, Chile, and Bolivia to mitigate the price volatility of lithium. Lithium, or the white gold as it is called, is used in making lithium-ion battery, which is the most expensive component in any electric vehicle. These batteries take up 50% of the cost of production. India has set an ambitious EV penetration target by 2030, 70% for commercial cars and 80% for 2 and 3 wheelers. So, will the newfound lithium reserves propel India into becoming a major global player in the EV ecosystem?
It does actually fructify and then we are able to exploit that reserve, then yes, it will make India a much more significant player in the EV ecosystem, because right now our position in the entire EV industry or in the battery industry, so to speak, is as a consumer. Like, we have a large base of population, we have large number of automobiles, we have large requirement for batteries. But if you have primary materials available within the country, then you can not just become a consumer, but you can start becoming a supplier. So it will obviously enhance the position of the country as a player in the entire EV industry.
Electric vehicles are set to play a major role in greening the transport sector. According to Niti Aayog, India could have a whopping 80 million electric vehicles on the road by 2030. Importing lithium is just one part of the ecosystem. To make it useful, it needs to be refined. Currently, China controls at least 60% of the world's lithium refining capacity. With newfound lithium reserves in India, will the dynamics change for Indian battery manufacturers?
We don't have any refining capacity. And what I believe is this discovery will now kind of help us to actually invest in various parts of the value chain, like lithium recycling or refining itself. And then, of course, the battery recycling technologies as well. So we'll soon have a whole suite of domestic manufacturing coming in, starting from the lithium mining to the cell manufacturing to actually the lithium refining, and then cell manufacturing, and then cell recycling. So that's how I see it panning out.
The Indian government has also taken steps to boost the EV ecosystem, including lithium-ion battery manufacturing. Production-linked incentive or PLI schemes have been launched for lithium-ion battery manufacturing and advanced chemistry cells. So with such a big reserve in our backyard, it will indeed give a boost to battery manufacturing. But simply finding reserves is not enough. This is only a preliminary estimate. At least 2 more levels of advanced estimates are needed to gauge the capacity and exploitativeness of the reserves. So what are the stages that lithium has to go through to become ready for factories?
It is very important to ascertain that it is an exploitable reserve. That's where further analysis and surveys are being conducted. Now, once that happens, second is development of those mines. Like, what is the right kind of mining technique? What are the right kind of mines that need to be set up? How are we allocating those mines to various players to exploit them? That will be the second step. And then the third step would be that once that raw ore has been taken out and we already have the process in place to extract the raw ore, then we'll have to have processing units within India. And that is going to be a very critical step. Here, if we want to do local battery manufacturing, then that precision manufacturing plants and processing plants will need to come up within the nation to be able to get the right quality of that lithium material that can finally go into battery manufacturing.
The finding of lithium reserves is indeed great news. It has the potential to make India self-reliant in the electric vehicle ecosystem. But far more research is needed before the lithium reserves can be converted into usable end products. Increased investment in the EV space and extensive R&D is the need of the hour. Meanwhile, these reserves have been found in the Himalayan region, which is an eco-sensitive zone. So the government will have to strike a balance between mining and nature to avoid future Joshimaths.
Turning our focus back to aviation, the Aero India show, which seeks to display India's growth in aerospace and defense capabilities, has put the spotlight on related stocks. Analysts say the event would improve the sector's long-term growth prospects as investments worth 75,000 crore rupees are expected. But are the stocks worth adding to your portfolio given tepid budgetary allocation? Nikita Vasisht brings you the answers in our next report.
With Aero India 2023, the Indian defense sector has managed to highlight India's Atmanirbharta or self-reliance in building military equipment. In the India Pavilion, dedicated to success stories in indigenization, the Tejas Mark I fighter is lionized as a key stepping stone to the development of a range of fighters. Tejas Mark II, the fifth generation fighter eponymously called the Advanced Medium Combat Aircraft and the twin engine deck based fighter, is intended to fly missions from the Indian Navy aircraft carriers. In addition, the LCA Navy is eulogized as an important platform for technology development that will power naval aircraft such as the TEDBF. The central government expects more than 200 agreements to be signed at the 5-day event for investments worth 75,000 crore rupees. Analysts believe this would improve the revenue visibility of listed defense companies in the long term.
The exhibition will witness participation of 98 countries and many domestic companies like Bharat Forge, Hindustan Aeronautics, Bharat Electronics and BEML would be displaying their technological and product strength. Therefore, it could bring some good news to the sector in terms of MOUs and new orders.
However, a modest growth in the defense budget for financial year 2023-24 coupled with premium valuations of related stocks could weigh on the sector's performance in the near term.
The long-term prospects for the defense sector has improved significantly over the years as the new defense acquisition policy is expected to accelerate the indigenous manufacturing, which is through active participation of public and private sector. Also, there is a focus to cut the imports and reduce the dependency. Further, the government has put an import embargo for a large number of items where for those products where we have enough technological capabilities. Given this scenario, we strongly believe that domestic manufacturers are going to benefit from these steps. If you see the last 3 years, average revenue for the sector grew by somewhere around 10% and profitability has grown by around 15 to 18%, 15 to 20%. However, due to premium valuation and modest growth in the budget allocation for FY22-24, we have a neutral rating on the sector.
The budget 2023 has allocated 5.94 trillion rupees for defense and related services for FY24, up 13% from the budgeted estimate of 5.25 trillion rupees in FY23. The total capital outlay, meanwhile, is 1.62 trillion rupees, an increase of 16% over the previous fiscal year's budgeted allocation. In comparison, investors were expecting up to 6.6 trillion rupees in allocation. Notably, shares of BEML, Bharat Dynamics, HL and Paras Defense have tumbled up to 14.6% since February 1. However, the Nifty 50 has gained 1.5% so far this month, while the Nifty 500 is up 0.22%. Analysts suggest investors with a short to medium term view reduce their exposure towards the sector, while long-term investors may enter related stocks on corrections.
The government, however, is focused on improving indigenization and achieve export target of $25 billion by FY25. Therefore, this shall lead to stronger order inflows for the domestic defense companies. However, the stocks in the sector could remain range-bound until big order announcements kick in, as most of the positives like high order book and margin expansion seem to be priced in. For long-term investors, we advise that they can accumulate defense stocks on every dip as the long-term defense story remains intact, and we believe India has only scratched the surface as far as indigenization and building of defense capabilities is concerned.
Mantri of Sher Khan prefers Hindustan Aeronautics and Bharat Electronics Limited. Clearly, analysts are upbeat on the sector given India's growing manufacturing prowess. Yet, the sector remains prime for long-term market participants as most positives are factored in. Further, 30% premium over historical valuations leave little room for immediate upside. Meanwhile, in today's trading session, investors will track announcements from Aero India show. Besides, weekly F&O expiry, bond yield movement and other global cues will guide the markets.
Two grey fighter jets, which have come from Utah, United States, to take part in the Aero India show, are attracting a lot of attention. They're arguably the world's most advanced fifth generation fighters. Fighter jets have come a long way since the First World War, when pilots used to take down enemy planes using rifles and grenades. Now we have supersonic jets equipped with guided missiles and radar evading stealth technology. But how did the jets evolve, and what is the fifth generation fighter jet? We decode this for you.
Airplanes made their appearance in the First World War, but mostly for reconnaissance purposes. These propeller-driven aircraft started carrying small bomb loads by the end of the war, which were used to blow up strategic enemy locations. It was during the Second World War that they developed the Sting. They highlighted how important it was for a country to have air dominance and the capability to control its airspace. The destruction caused by Germany's Luftwaffe was a case in point. By the end of the 1940s, several countries had developed what is now called their first generation jets. These include F-86, MiG-15 and MiG-17. Gradually, improvements and updates were made, and the countries introduced second, third and fourth generation fighters. Every jet of a particular generation had significant technological advancement over the previous generation. Better design, easier handling and more precision were the cornerstones of these advancements. In the case of fifth generation fighters, one word that describes as well as differentiates it from the previous jets is stealth. Special radars are developed for these jets since the enemies can detect the aircraft's radar emissions. Features like infrared sensors and visual tools for special protection and radar jamming make it difficult for enemy systems to detect, track and engage these aircraft. These jets can also super cruise. The surface of these jets has been kept plain to reduce the radar bounce off. Also, specially shaped exhaust nozzles have been put in place to reduce infrared radiation. The engines of these jets are located in the body of the plane to hide as much of heat signature as possible. In 2005, with Lockheed Martin's F-22 Raptor, the US became the first country to field an operational fifth generation fighter. Currently, only the USA with the F-22 and F-35, Russia with the Sukhoi 57 and China with the J-20 have fifth generation fighters in service. India, Turkey, Sweden and Japan have programs to develop their own fifth-gen fighter planes. In 2010, India launched the Advanced Medium Combat Aircraft program to develop its own single-seat, twin-engine, fifth-gen fighter jet for the Air Force and the Navy at a cost of 15,000 crore rupees. The design is being developed by the Aeronautical Development Agency of the Defense Research and Development Organization DRDO. The jet is expected to be produced by DRDO with Hindustan Aeronautics Limited and a private company. The first such jet is expected to take flight by 2025.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
According to experts, the display of F-35s at Aero India 2023 signals that the United States wants to win an ongoing Indian Air Force tender of 114 multi-role fighter jets Under the tender of the 114 jets, 96 would be made in India and 18 will be imported. That's all for today. For more news and analysis, please log into our website www.business-standard.com. And we'll see you tomorrow. Thanks for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.